Welcome to this video. In this video, I'm going to be doing a stock analysis of Rezolve AI. Now, as you can see for the day, it is up by 8%, and that is because the earnings just came out today and they were quite amazing. Before trading today, we're up by 30%, but we have since then calmed down a bit. Now, as you can see right here, they're raising the guidance this year to 150 million and initiating guidance next year to 500 million, which is quite amazing. And as you can see here, they shatter analyst expectations for the growth, which is very nice. Now, if you don't know what they make, well, it is a sales software. So say you Google something, for example, you say, I need running shoes, what are the best? Well, Rezolve is going to give you what they think are the best. And of course, this brings customers to Rezolve and to Google, and they also have with Tether and Microsoft and a ton of other companies. Now, as you can see, however, it is quite a volatile company. As you can see right here, the beta is 1.97, meaning it is 97% more volatile than the average index. And the company as well is quite small. As you can see, we only have a market cap of $1.3 billion. So be very, very careful in stocks like this. Also, as you can see, we move quite often between overbought and oversold. Now, if you don't know what overbought and oversold is, that is in the RSI index. This guides where the stock is going and where it's currently headed. Now, as you can see right here, we're in oversold territory. That was actually earlier today, or actually yesterday, because it was up so much today. As you can see, then we quickly rose here. But below 30, that's where there's a ton more sellers in the market than buyers. If there's a few more sellers than buyers, we're down here in the sold area. If there's a few more buyers, we're in the upper area here, and a lot more buyers in the overbought right up here. And once it's down here and up here, it's a lot more sensitive because we have so many more buyers and sellers on either side. So always be careful. And as you can see in a stock like this, we often see peaks and valleys up in overbought and down in oversold. So be very careful. Now the earnings that were here today, and they actually beat them, and last time they hit them right on the nose. Now the income statement, they're not that amazing, and it looks a bit weird in here, as you can see in the revenue, as it only just says ticketing of football events, but that's because it hasn't been updated yet. Now something you should also notice, look at this, they have no debt at all, which is absolutely amazing. Now, there is something that I don't like that much, that is how many closely held shares there is. This means that these shares can't be traded on the public exchange market. This means, let's say Daniel Maurice owns, let's say, every one of these shares. If you want to sell out that, he's going to devaluate the stock itself, not devalue, dilute the shares because there's so many more on the market. So if you want to sell out, or all investors want to sell out, chances are we're going to see it tank completely. Of course, we don't expect that to happen, but with so few shares afloat, that is something that realistically can happen quite easily. Now, if we roll down here and we look at the seasonals, as you can see right here from 2021, as you can see, it hasn't been the most impressive stock. Last year lost 64%, 2021 up by 0.2%, 2022 up by 2%, and then 2023 up by 6%. Now this year we are up by 31%, at one point we were even up by 88%. So as you can see, it's a very, very volatile stock, so always do your diligence before investing in companies like this, because chances of risk are a lot higher in companies like this. That being said, I just bought quite a lot of shares today after I read their Q2. Now, if you look at the technicals, as you can see, for the day it's a buy, and for the month it is still a buy. Now, some people might think that it should fall down in the month, but that is because it has risen so much today. That is the reason it is still a buy in the monthly technicals. Now, the analysts trading on this are quite amazing. We have 4 strong buy, and that's it. As you can see, they're estimating the max is $9, the average is 7.8. That's because the lowest here is down at 5. Over, it wouldn't surprise me if this stock ended the year about $8 or $9 at all. I do think we should be in the upper echelons right here. And in 2-3 years, 40-50 bucks for this company wouldn't surprise me at all if they keep that track record they're currently on. The annual EPS, as you can see, it's negative last year, negative this year, and the first year we're going to be positive might be in 2028, hopefully before that, but overall we shouldn't expect too much too soon. Now, the annual revenue, they're also estimating to increase that quite fast. As you can see, just how much faster they're generating revenue. As you can see, last year they were estimating was $250,000. This year, 40 million. Next year, 96 million, and then next year again, of course, 167. So as you can see, they're increasing a ton. Something I also like about this company is how few employees they have. As you can see right here, they only have 61 employees. Of course, this is very nice because this means they're focusing much more on the business size rather than hiring people, which in reality maybe they don't even need. But always be very, very careful in stocks like this. That was my analysis of Rezolve AI. If you like this video, please don't forget to leave a like and subscribe.